What's up, everybody? Happy Friday. I had no idea when I made the topic today that today was going to be such a bloodbath for crypto, but it doesn't change. In fact, it enhances the point I was going to make, which I think more people need to be aware of. I talked about this last week, but I want to talk about it some more. Also, as we get into it, we're going to talk about how to save a little bit of losses or avoid losses altogether using StarBucks, the trade that I took this week, for example. But hang out until after the music, and we're going to get into it talking about Bitcoin and Monero both, and talking about how everything else, as if it was priced in Bitcoin, has been performing. That's the main topic for today. So hang out. We'll be right back.
Believing that he's an animal he thinks he has the right to kill.
Once again, happy Friday, everybody. So today I want to follow up on something I started talking about last week. I've sat here this week and just watched crypto just experience. I wouldn't call it a bloodbath just yet, but it's not been a very good week. It's not been a very good couple of months. And what I pointed out last week was that one of the cryptocurrencies that has been outperforming pretty much anything else uh, when priced in Bitcoin has been Monero. And I want to be very clear because whenever I point this out, I get a lot of pushback from especially the Bitcoin maximalists who do not want to hear anything other than how great and perfect and useful Bitcoin is. it has its uses. I do think that Bitcoin is the store of value. Is well engineered in that there's limited supply. That as long as people buy it and don't sell it, then the number is going to go up. As long as the federal government and every other country is printing more dollars, and so Bitcoin's value in fiat currency is going to continue to rise. But no one uses Bitcoin because in the future it is perceived to be worth more. And so it's been pretty clear to me for a long time that the whole notion of Bitcoin being currency is categorically not true. And that is a very contentious point to make. But I think that if you just really sit down and think about human nature, no one really wants to spend a money that's going to be worth more tomorrow today. And you can say this is Gresham's law about, wanting to spend the worst money, and that's fine. But I've noticed for many weeks and months, and actually a year or two now, that Monero has become the currency of choice on the dark web. Yes, that means that criminals are using Monero. It is untraceable, it is private, and that's the same kind of, and that's not saying that it's a bad thing, because that's exactly the criticism that people levied against Bitcoin 14 years ago when I first started getting interested in it. It was just a criminal thing. Now it has full, capture of everyone's attention. You have white collar people using it for legitimate means. Well, they're not really spending it on stuff. They're just trying to, develop and buy yachts with it, basically. But for day-to-day transactions, Monero has proven itself to be very, very useful. And while this is a very large range here over the last 2 years, and yes, it has the volatility of a cryptocurrency, it has kind of almost become a stable coin. And so if you look at the thing that happened this week was Monero Bitcoin, at least in the Kraken sense, has made a new high this year. Now, of course, people are saying, well, Bitcoin has done better over the last. Yes, Bitcoin has done better as a store of value. But the last time that this happened, the last time that Monero outperformed Bitcoin was in the bear market of 2022. And this just lends credit to the fact that crypto has entered a bear market condition and has been basically since the all-time high of Bitcoin. It's just another indicator. Now, how long this will go, how long will the bearish trend last? I could give you some technical analysis and we could try to parse that out, but really nobody knows. But this is what's happening now, and I want people to be aware of it. But I'm also going to take this chance to maybe throw a little bit of salt on crypto too, because not crypto, but just crypto, but mostly Bitcoin, and a lot of the kind of the narratives that I think have surrounded it about why it's somehow better as far as currency and money. One of the common memes that I keep hearing from people about Bitcoin is that everyone gets the price that they deserve, and this is kind of like a very arrogant thing that Bitcoin hodlers will say, saying, "Oh, well, I'm smarter than everybody else because I bought it now at 56, or excuse me, sorry, I'm still thinking in a couple of hours ago terms, $53,000 Bitcoin." And anyone that's not buying it at this price or the price that they get it at is somehow less deserving as they are. And the question I have for them is this: what do you tell a 5-year-old? 5-year-old, some kid is going, they grow up and they become 18 and they look back and it's like Bitcoin is what, whatever you think the price is in 13 years. Sorry, I wish I could have bought it, but I was 5. Another thing that no one's ever answered the question to me is how do loans work in a Bitcoin standard? There's a whole, I'm kind of jumping around here because there's a couple of things that I've just been thinking about this week, in discussions I've had with people about Bitcoin. I mean, it's a lot of cope, I think, going on right now. I'm trying to put all my thoughts together on it, but how exactly does a loan work in a Bitcoin denominated system? A deflationary money environment. You were 11 years old when Norak made his first Bitcoin post. Are you talking about on TradingView? Because that was 2014. My TradingView, my first Bitcoin post on TradingView. Let me go back and look real quick. I am remiss that I haven't been posted on TradingView nearly as much because, yeah, my I don't even have the picture anymore. But this is April 18th, 2014. Price must hold 445, or this move up is just a pullback to break the low. Oh, there it is. How did that work out? 446, that trade right there. Well, that's a pretty good buy. 446, I have to say, my first post. This is it. It was. It was basically a point where in this trend, which was the end of the 2013 run up to 1100, it had to hold, or else it was probably going to break lower, but it did hold, and that was the support basically there at 446 10 years ago. So anyway, been a while that I've been talking about this, and a lot of time to think about it, and let's just use that for an example. Since I brought it up, and since thank you, Amy, you brought that up as well. So let's imagine this. Okay, let's get out our calculator. So let's say that this is 2014. House prices were a little bit more reasonable, we could say. Let's say that you had you bought a house for maybe like $250,000, $250,000. Well, let's think in Bitcoin terms. So $250,000 divided by 446. So essentially, you would buy a house for you would buy a house for 560 Bitcoin. Okay, 560 Bitcoin in 2014. You take out a mortgage because most people don't have that much money hanging around if they're working a regular job. They don't have much cash saved up. But let's say that you owe the bank. Say you do a regular down payment, 0.8. Hold on, 560 times 0.8. Let's say that you owe the bank 448 Bitcoin. Okay, so your monthly payment is going to be roughly, let's say, about 1.5 Bitcoin. I'm spitballing here in my head what that probably is, but yeah, let's just assume it's 1.5 Bitcoin. That's your monthly payment to pay back this loan because you're gonna have to pay back. This is gonna be amortized. You're gonna have an interest rate, and you're gonna pay it back monthly. That's how it's gonna work. So, what would you be doing right now today, if you still had a 30-year mortgage based in Bitcoin on your house? You would be paying the bank 1.5 Bitcoin every month. And so every month you would be spending about the equivalent of $80,000 paying off your mortgage every month. Now, I don't think that people's wages are going to increase by that much, but you'd still be having to pay back that much Bitcoin every month. And that's what that's what debt would look like in a deflationary system. You know how everyone talks about how you should take out as low an interest rate as you can about 2 years ago to buy assets with, whether it's going to be property or Bitcoin, as a lot of people did. It was a good idea. If you can get something at 2%, a mortgage at 2% or 2.5%, when inflation is at 3%, or at the time was like 8%, then yeah, you're winning. You're winning because your mortgage payment is going to stay the same, and meanwhile, the value of money in an inflationary system, in a fiat system, is going to continue to decrease. And so it's going to get easier and easier month after month for you to pay off that mortgage in an inflationary system. In a deflationary system, it gets harder and harder. And so if you take a step back and you look at history and you look at when things have been on a gold standard, which is, the examples of when we've been in that sort of thing, or, you go back, back to the Middle Ages, basically. Um, this is how, people can't afford to pay off debt in a deflationary system because it gets harder and harder every month when the value of the value of the money is increasing. So I don't know why no one's ever really sat down and explained this to me. Maybe I need to do a little more research. This really only occurred to me this week. I don't know why, I it took me this long to kind of think about this in these terms. But in a monetary system that's deflationary, debt will destroy people. I think maybe the cognitive bias that why people don't bring this up is because a lot of people that get into crypto, I mean, if you know about crypto, you're a smart person. Let's face it. I mean, you have to be a little bit smarter than your average bear to have the job that gives you disposable income to possibly invest in it, but also kind of understand like what it is. Be pretty proficient at least with a computer to set up a wallet or at least do stuff. Okay, you can't be dumb, and I think a lot of people kind of assume that they're in a as much of a gameful shape. But let's face it, like a lot of people are really bad with money and they get in bad debt. And in a deflationary system, you think it's bad uh, with the interest rates that people with bad credit have now. In a deflationary system, they just basically become serfs because they don't own anything, and they can never own anything. And so this kind of circles back to the thought I've had about Monero versus Bitcoin. As far as a currency goes, I think I was having a discussion with a friend about, how, Bitcoin there's a lot of projects, a lot of layer two solutions that are coming out that are going to make it more private. But I don't think privacy is really the point. I don't think privacy is the point of, what is the difference between Monero and Bitcoin or Bitcoin and other currencies, because Bitcoin is deflationary. There's a limited supply, and there's less and less being made. And every day, people lose their wallets, lose their keys. Whereas Monero is going to be constantly inflating. There is a built-in inflation. I could look it up exactly what it is, but it's small. It's something like I think either between 2 and 4%. But yeah, my audience I don't think is a Bitcoin maxi, but I really I'm kind of speaking past you guys with some of the discussion because a lot of my good friends are. And I'm not trying to like change their minds or anything, but these are questions that, as I love being told that I'm wrong because it helps me seek truth. And when I'm trying to find investments, whenever I'm trying to, decide what's the best place to put capital, you need to do away with what people's opinion. Well, you have to listen to people's opinions, but you need to find out what's actually true. And I'll talk about that here in just a second, what that means to a couple things. We're going to look at NVIDIA in just a second, and I'll tie this in. But to just kind of put a bow on it, the problem is not that Bitcoin has a public ledger and people can see it. Thus, it's Monero is better just because of privacy. Take Monero out of the picture. You have to have an inflationary monetary system because it's sort of like democracy. It's the worst system there is, except for the other systems, which are worse, worse, worse. And I think that so many people have got like enamored by this idea that they can just buy an asset like Bitcoin and it goes up in value, and they just think this is a panacea for all of the financial problems of the world. And there's a clear example: debt, taking out debt, issuing credit to people, that it's not a good system. And as far as transactions go, as far as people using it to transact, which people are right now using Monero for on the dark web, they're going to do that because they don't see it as a store of value. They see it as a transactional currency. And so I'm not bringing this to people's attention to say, oh, well, Monero's going to moon and all that kind of stuff. I'm not saying that at all. I just want people to be aware that there is an active use case for a cryptocurrency. A cryptocurrency is not brand new, but has been around for a very long time, and people need to be paying attention to it. And you also have to kind of, it also, I hope to kind of get out of this, maybe break people from this hype cycle, because I mean, I want to bring up. I remember using a screenshot from earlier this year. Let me see if I can find it on my YouTube. This was hold on, let me find my streams under my content, because this was I want to see what date this was. Load more. Oh, it was a while back, actually. There was a certain bit of euphoria that was definitely in the market. Where is that? Pictures, thumbs. And by the way, guys, if you have symbols to look at, some people have already started typing it in the chat. We'll look at that in the last half of the live stream. I'll give you my opinion, and sometimes people don't like it. I think someone came in asking about some cryptocurrency the other day, and I had to tell them. I said, "What do you like about this?" And they're like, "Well, it's a cheaper Ethereum. It has less fees than Ethereum." And I'm like, "So why would I mean? What are you telling me here? Like what? Smart contracts?" He left the live stream, and that's okay. I mean, I had to tell him what I thought. Oh yeah, so this was live stream from 3/1/2024. This was March. This was March, beginning of March of this year, which was basically, yeah, March 1st, which was right here. And I just remember reading Bitcoin chats, and it was a state of absolute pandemonium and euphoria. And I can't come out and say that that was the top, because it wasn't. The top was actually, a week later. But man, like that, the people that were very, very invested, both financially and ego in Bitcoin, were just falling over themselves of how brilliant they were and how wealthy they were going to be. And you got to stay away from that shit. I can't really tell you the exact like measurement. I can't give you a line on a chart. I can't give you a TA that will let you identify that. But there are several instances of where, I mean, basically the gist of it is when everyone is absolutely certain that something is just the best thing ever, cannot go down, is just, you're an idiot for not buying it. You're going to be sorry. Mainly, you're going to be sorry. The you're going to be sorry crowd. You got to stay away, because they're not going to be right. That is market euphoria, and I've gaslit myself throughout this whole process back in March and April, trying to tell people, like, look, this thing failed to really push higher, failed to really bust ahead. I didn't want to say it at the time, except to maybe in a troll, that the bull trend was over, because I didn't have proof. But now here we are months later. It definitely was the end. And I think there's a lot of people that still think this is it. But it's like funny. Every day I scroll my Google feed, because it knows that I follow Bitcoin stuff. Every day I kind of check Reddit or Bitcoin Twitter, and there's a couple of common things, I mean, that have been happening. Like everybody posts these things about how expert says that a new bull trend is coming. And I'm thinking to myself, like, you guys keep saying this every single day, and it doesn't materialize. Like, who are you writing these things for? Like, is this because the algorithm knows that people want to consume this to make themselves feel better? Or is this hedge funds publishing these things to provide exit liquidity for a lower buy-in price that they have. It's very possible. I don't know why this is happening. I think people have told me that it's the on-chain analysis tells you that it's a beach ball being held underwater, but I mean, they need to pump some air into that beach ball. Where do I think this is going? I think it's going back at least to the ETF launch. You know, that's basically here. And that's really just kind of a karma sort of thing. I don't believe in karma. I think that people just kind of, I don't, especially not when it comes to inanimate objects like a stock. But it's just one of these things about price and, you know, and market behavior that to have something return to the starting point of this, you know, incredible euphoric event, that's it. It would just, in hindsight, it's just going to make so much ironic sense. So that's where I think that it is headed, and yeah, we'll see. We'll see. Who knows? I read people talk about they draw. I'll counterpoint. A lot of folks have been drawing some lines on a chart to point out that this is a what is this? This is an expanding. What was it Peter Brandt said this week about it? Some kind of expanding triangle or something like that. And then what they do is they draw this, you know, just immediately it's going to go up and up. And that's I guess, maybe. But the bottom line is it should have gone, and it didn't. And that's where we sit here on Friday, down another 5%. You know, another thing that I've had conversations with, you know, people ask me what I've been doing over the summer as far as money-wise. I've been kind of doing the same thing as Warren Buffett, not because Warren Buffett does it, but I've been buying bonds. Very unsexy bonds. Now, I've been a little kind of cute, and I've been doing corporate bonds as well as treasuries, but I almost kind of get some sick pleasure in telling people that I was doing that throughout the summer, especially crypto bros, because just the idea that you would put any money into U.S. treasuries, the enemy, is just abhorrent. But, I mean, here we are, Bitcoin down, you know, 20% or more, depending on where you were this summer, and bonds are holding their value and they're up. Because what happens is if the Fed does lower rates this month, as people presume it will, I don't necessarily presume it, but if they do, then all that money I put into bonds is going to instantly go up. The value of it. I'm going to be able to buy more stuff with what I put into bonds. That's dry powder, if you want to call it that. And so I say that Warren Buffett's doing, when people say that he sold a bunch of Bank of America last week to raise more cash, he doesn't actually keep, you know, stacks of dollar bills or coins and swim in it like Scrooge McDuck. He actually is buying treasuries because these are the most liquid asset that you can have that is interest bearing. And so it doesn't just sit there and just absolutely lose value. He's getting somewhere, you know, now probably about 4.75% on that, but it's not zero, it's not negative, and it's not minus 4.75% a day. And so, you know, I'm getting older, and the more and more I start appreciating the wisdom of our elders and realizing that there isn't that much new under the sun. And people that think that the world has changed, the rules have changed, I think that's an exercise in ego. So, all right. Yep, still on crypto. Let's get off crypto. It's 30 minutes in. So I did want to bring up something about NVIDIA. And I had another friend that asked me about SMCI. A lot of people are NVIDIA down also 4% today. A lot of people have been asking me when to buy NVIDIA. Let me pull up this Reddit post that I saw. And this is going to apply to anything. This is going to apply not just to NVIDIA in particular, but this is going back to just general. I like to focus on lessons that I think are going to be applicable anywhere, to any stock or crypto or any kind of investment. You know, the whole idea that I liked getting in, putting my money, parking my money in bonds this year was because everyone told me it was such a stupid idea. I love it. Tell me more how wrong I am. Because when everyone is telling you how awesome something is, whether it's Bitcoin, whether it's Nvidia a couple of months ago, whether it is EV stocks 3 years ago, do you remember that time when everyone was buying EV stocks and everything related to EV, and everyone said that oil companies were just the worst thing ever? It was actually the opposite. The EV had really played out. It was a bubble, and buying things like ExxonMobil was just an incredible investment. I've talked about that a lot. That January of 2021, looking at the market, can't figure out what to buy. The bargains, the discounts, the one sector that was down in the beginning of 2021 was the oil and gas sector. And now that whole sector is up over 100% in 3 years. It's not 10,000% returns. But when everyone thought it was the worst thing ever, it was the best thing to buy. It's kind of that simple, but of course it's not, because you don't really know. And even I was gaslighting myself. Like, is this not just an obvious thing? I don't want this stuff that's up, 200, 300, 1,000%. I don't want any of that EV stuff. I don't care what people tell me about how great it's going to be. I know better than to do that, but I know what to avoid. But actually buying something that everyone thinks is shit is difficult. And just to go back real quick to Bitcoin, I mean, everyone thought that Bitcoin and crypto, let me bring up the weekly here, it's been a while. Everyone thought with the collapse of FTX that crypto was just the worst thing ever. That was when you buy it. Here, the first week of March, where I made that screenshot because that was what I was sensing was the mood of crypto, that's when everyone thought it was the best thing ever. Price is a reflection of people's perception of value. And when everyone thinks that it's just the best thing ever, that is the highest it is ever. It's really that straightforward. People think it's crap. People think it's the best thing ever. The exact opposite of what you should be doing as far as buying or holding it. But it's hard because we are all the market. You're the market. I'm the market. That person on Twitter is the market. That person with 100,000 followers. We tend to want to listen to someone with lots and lots of followers because we come from tribal creatures, and the big chief that everyone listens to, we typically follow because he's the smartest, he's the strongest. We're hardwired to do these things, and it's very maladaptive in our current world, especially in stocks, and not stocks, but financial. So Nvidia. Let me just cut through the bullshit here. Nvidia just 2 years ago, from the top in 2021 to the bottom, dropped 69 giggity percent. So just 2 years ago, well, 2.5, Nvidia had almost a 70% drawdown. Before that, well, this little point in here, COVID, we'll count COVID, 42%. But before COVID, in 2018, 6 years ago, it had a 58% drop. So in just the span of 2 years, and then 4 years before, you had minus 68% and you had minus 58%. And I thought this was very interesting. This article here. Oh, did I lose it? Where's my thing? Where this guy was on Wall Street Bets today talking about how, people are such idiots. The stock drops 10 to 20% and everyone is targeting 70, 80. And they're wrong. I mean, first of all, I didn't want to comment on, I didn't want to tell this guy what it really meant. This is cope. This is cope. cope. But really and truly, if someone is saying that NVIDIA price target of 70, that's right around here. That's about 50% from the high. You're gonna get it eventually. You're with NVIDIA or any volatile instrument, even Bitcoin especially, uh, Ethereum, um, Tesla. If you wait long enough, you're going to get it on sale half off. And so it is. When people have asked me, "Oh, should I buy Nvidia? Should I buy Nvidia?" I've been getting that a lot over the summer. Should I buy it? On this dip and stuff like that. I'm like, no, I'm not interested in something like Nvidia until it's down at least 50% off the high. And so, and I can sit here and we can. I'm trying to like maybe take a step back from like doing. We're going to talk about some TA here in just a second with Starbucks, some very very specific applicable TA to trading, but these are just kind of general premises that are incredibly valuable, which is volatile stock. Wait till it's half off. Just do that and stay away from people that are posting about their cope. People that are trying to chase the returns. The reason you think it's still a good buy is because of the recency bias of it going up. And again, like I said, you are the market, we are the market, I'm the market. The fact that people still think it's a good buy is almost evidence that it's not. Think about it that way. As long as there is hope, that's probably not the bottom. The bottom is when there's no hope. That's when something is a deal. Is when everybody thinks it's just absolute hot garbage. And that's hard because you're not going to find somebody that's going to say it's the bottom, because everyone you read is going to say it's hot garbage. But that's why it's so hard to do this stuff. So, am I wrong? Am I wrong? Yeah. What is the symbol for Gary network disclosure code? Get those symbols in. We'll look at it in just a second. Got a lot to look at, so we'll do a lightning round here towards the end. All right. So, and what's CASPA, Jeremiah? Please give me symbols so I don't have to look this up if you want me to look at stuff. So this week, the only stock trade that I took a stab at was Starbucks. Okay, and so this was one of my spikes. Every morning at 10 a.m., if I'm not otherwise disposed, I look for these opening spikes on stocks across the market. Now, there's been a couple of really good ones, but I'm very picky. I'm very picky about these. The last ones, I think we had one with Lowe's. There was one with Lowe's here on August the 13th. That was the last one. And what I like about these, or like about this one, let's just kind of start over, is when you have these kind of events. This is 9:30 in the morning, basically at the open. What you'll have is price will break a major low, and then within that 30-minute period, by about 10 a.m. Eastern, you'll be back up inside the range from whence it began. I really like to see this when it is at a major support or resistance. And this is like basically, I guess you could say, my bread and butter trade. This is, last week, the live stream that I did, I talked about how I got short the ES with a spike, a reversal spike, and how I got short Bitcoin with a breakout spike. I should probably clip that out to be a little more, attention deficit disorder friendly. But go back and watch that if you're really interested to learn about how I used them in actual practice a week ago. So, but this is an example of a reversal spike. This is Lowe's, and this was a couple weeks ago. And so that came down, spiked, and then went back up. Now, it was at a 50% level of basically the July to the August trend there. So what I like to have happen, and what I think makes a good spike trade, a good reversal, is price should shoot right off of there. Because if you think about it, people got stopped out when they when the price went down like that. Imagine people bought it at 230.41, that 50% level. Imagine they bought it at that level. And the idea of this is you're getting it after everyone else has been stopped out. And you are able to capture it when people are being forced to close it, or if they're FOMOing back in. Word of the narrative that you want to apply to it. But this has been a very good trade from a couple weeks ago. And so I've been hunting for another one, and we of course had a couple of down days with the market, and I think that we're going. I've thought for a few weeks now. I have puts to that effect from 3 weeks ago now. I'm not saying I timed the top perfectly, but my spidey senses have been tingling, and so I've been looking for a pullback. But you never know when this thing's going to end. We're still in a bull market, stocks wise, and so I looked this week and I found a spike yesterday on SBUX. Now, this one this morning, after coming down and not really launching like I wanted it to, I posted about this on my Discord because I posted about this trade yesterday when I took it, and I wanted to make sure in case anyone took it, they understood what I was doing with it so they didn't be left out in the cold. But it started doing this little mess down here, and if it doesn't just go immediately, I'd rather just cut it and try again with another opportunity. And so basically this morning, around about 10 o'clock, I cut it at about 92.07 right there, and just to kind of see that was the right move to do. And this comes from experience. This comes from just understanding that about this trade setup, that the good ones like the ones in lows, or the one that was, I believe, the most recent beyond that, which was in Truist TFC. I need to go back and find this. This was back here, which was back in July. A good spike setup is one that just good goes. It really is a sign that they pushed the low, they really explored lower prices, it got rejected, and there it goes. You don't want to see this thing kind of hanging out there. And so this isn't like a rule. If someone, I post, my rules in the Spike Reversal channel on the Discord, but this is one of kind of those esoteric things that if something doesn't go quickly, I'd just rather just cut it at break even and move on rather than take the loss. And in this case, on SBUX, if I had just been very unattentive, then I would have hit my stop. But this is just a good example of how you can kind of avoid taking stops that you don't need to. If you just kind of think in terms of, okay, what's the setup that I'm playing? This is going to apply to any setup, whether it's a breakout or a pullback or a reversal like this. The idea of a reversal is you want that thing to just go like, you want that thing to go quickly away from your entry and start getting into profit. And if it doesn't, then something might be wrong. And you know what? You can always just find another trade. And so that's kind of like the gist of SBUX trade, and why I wanted to kind of put a little bit of technical stuff, talk about spike setups a little bit more today. This is kind of one of those little nuances to trying to play reversals. You want it to be quick. You want it to be quick. All right, let's do it. Let's talk about these symbols I got to look at. So let's go back up to the top. In earnings. Oh yeah. So about 2 weeks ago, I posted a video about an NVIDIA earnings watch party. So there was a video. Do I have that in my notes? Yeah. So again, going back to just the kind of esoteric, non-technical, when should I buy, or more importantly, when should I not buy an asset? This was from August the 28th, the last earnings. Literally, people having an NVIDIA earnings watch party. This is a top signal. Like, straight up full send. Like, So no, never buy something where people are having price watch parties. That's bad. That's an easy avoided loss right there. What was that? The 28th. The 28th. Well, yeah, it was basically right here. So something like that. That's it's just oof. I'm befuddled because that kind of stuff is just like it's just that's just how the market is. And why more people don't understand this, why more people don't take a step back and realize, hey, when everyone thinks that something is just the best thing ever, when everyone's in just this state of I'm so smart euphoria, that's when you should get out. I think because it's hard, because again, it goes back to our whole tribal nature that we like to feel a part of something bigger than ourselves, and we look at people around us for that confirmation bias, and that's not how you make money with markets. That's how you lose money with everyone and feel a part of everyone by losing money with them. So yeah. All right, let me get to the symbols here. Let me bring this up. Nvidia. Oh, the Nvidia breast signing. I'm not sure when that video was, when that picture was taken. So let's see. Let's go back to the live stream chat. All right. So the Russell. Let's look at that because that's two things. IWM. In general, what you kind of presume about, I'm on a weekly, is that smaller cap companies like they're in the Russell are going to do better than big caps in good times and worse than big caps in not good times. And so that I don't really even have this on my list, but just a quick comparison today versus the stock market. SPY down 1.68, IWM down 1.9. I honestly don't look at the Russell very much. I really because I don't really trade the RT, the Russell futures. I trade the ES futures and the Nasdaq futures. And when I'm looking at just general, what's the market doing? Like I said, 3 weeks ago now, I got short the market with some SPY puts because my spidey senses were tingling, because you had this giant upswing through the most part of through the beginning of August. Basically, August 5th bottomed out, and you had this movement right here, which bothered me. Like nothing as a contrarian bothered me more than a big yeet like this. And so the fact that the market moves so quickly back up to that high really concerned me. It's not really a recipe for breaking that high, the past all time high from July, and so I kind of knew that this was a good time to take SPY puts. It's funny because throughout the beginning of the year, I would get questions on stream or on Discord. Is the market going to crash? Is the market going to crash? Is the market? Everyone, the uninitiated, seem to love to throw SPY puts like darts at a market going up to try to. I think it's an exercise in ego of like, hey, I caught the top. Well, this is how you do it. You don't short a nice lazy move up because that's healthy. Doing pullbacks, every few days to the red line to the Tinkinson, that is a healthy way for something to just slowly appreciate. It's boring as hell and it makes you want to do stupid stuff like buy SPY puts. But when you have a very errant move where it just goes straight up, that's when it's actually worth it to potentially set up a short. And I know you asked about Russell, and I'm talking about SPY, but that's just because that's going to be my general answer. I don't have any unique opinion about Russell, so it's really just going to be kind of dependent on the market as a whole. And so right now, you kind of have the same thing going on where Russell topped out in July. Hold on, I need to sneeze. Sorry, guys. And you failed to make a higher high, and now it's falling off with the rest of the market. And so I think that basically the Russell's going to stop when the SPY stops, when the market as a whole stops. I guess I should probably do an assessment of when that is. So the volume profile level, well, you know what, I'll do it for Russell too. So where we're looking at here, the volume profile level, ooh, we already broke it today. The next level, it's probably going to be somewhere around 529, 530 SPY. And this is actually the level I was looking at as a minimum here in the move down in August. We're only at about a 4.5% pullback. So we're not even in that correction territory here. I may start looking and trying to trade for a bottom with futures next week, kind of throwing bait out there. But I'm not really going to be really convicted that this is a bottom based on the broader time frame until about 530 SPY. And so the equivalent there, well, it's going to be probably going to be in this range right here. So where the volume profile level here is, I would say the first level that we might see that the Russell come down to, it's close, 205, but again, that SPY level is much lower. So I'm going to probably weigh it on the point of control for this whole year's action at about 202. So yeah, SPY, I'll be looking at 530 where I'll get interested, and then Russell I get interested in 202. But by the way, thank you for having me look at that, because I don't look at Russell very often. But basically, that's just where most of the trading actions happen. Most of the people have their positions. That's what volume profile is. But we'll see it as it comes up. Zoom out and show us November. November of what? Which one, Jen? November of SPY. Okay. November last year? Or November what? November last year. Last 20. Here? November 2023? It's familiar because it was what I was talking about in this August pullback. Because in this August pullback, we only had this action to, oh, it doesn't like that. Hang on. I got to go to a 4-hour. So in this pullback, this was basically from April to the April pullback we had this year to July when it topped out. That level was also 530. And so that is why it's familiar, because that was the level that it was likely going to start stopping out there. It, of course, went lower because Japan reasons. But yeah, 530 is still that key level, basically from May, essentially. So I think that's what you're remembering. All right, let's burn through these. WBA. Well, I don't know if you've seen some of my videos, Volv, but this is one where I bought this in January of this year to start the year, and when it broke 20, I've still got this circled right here because I made a whole video about why when something really starts to be crap, you just have to cut it. And every damn week, I am so glad that I'm not in this stock. Nobody likes taking losses. Nobody likes capitulating. But holy crap. I am so much glad that I have the capital of $19 a share's worth versus now having the stock at $9. So is this a buy? Well, I've been seeing more and more articles about how it's just crap, crap, crap. So yes, I have to be interested as a contrarian. But if we just kind of, I don't even really want to use volume profile levels going back and forth. I tell you what I'll probably do, and this is going to apply to Intel as well. Goodness gracious. I don't know, man. This is bad. Because it's getting this thing is getting under $10, which means it's getting outside of investment grade. This means that ETFs are going to possibly take it out of their funds. Excuse me, mutual funds are going to take it out because it's below 10 is like kind of like below investment grade. Um, that's not saying that it can't turn around. I remember this being the case for Alcoa many years ago, where Alcoa got delisted from the S&P 500. It used to be the first earnings for S&P 500 was Alcoa. Like that was what led it all off. It was the AA is the top of the list, and then almost within like weeks of it being delisted, you have this giant yeet of Alcoa. So I don't want to say that that's necessarily a bad symbol, but I need to follow this a little bit more closely. And the first thing that I'm going to notice, the first thing I'm going to pay attention to, is when it recaptures this red line. This is the Ichimoku Tenkan-sen. It's nothing fancy. It's just the 9-period median, the halfway point. And in any trend, bullish or bearish, strong bull or bear is going to be contained by this line. It's better than a moving average, in my opinion. And the weekly right here, it still has not recaptured it. If we go to the daily, it's still pulling back and just not really giving you a good chance of reversal. One thing that I've done in this case where I really wanted to be in a stock, that was Truist Financial. And Truist, if you remember last year, the whole thing was banks are going to fail. And I knew, well, I speculated that that was a lot of FUD. And so the one thing I wanted to look for when I was going to buy this stock, this bank stock, was a cross over the red line. And so I picked this up back in June of 2023. Now, of course, it still went down to make a second but higher low. But that's just kind of my point, where on a stock, because I'm usually looking to hold something a long time, that weekly Tinkinson, that weekly red line. And so getting a close back above it on the weekly is going to be my first sign that, hey, I need to maybe look at this. And so, not saying it's going to be a bottom, but that's just kind of a setup that I'm looking for. Because there you have a little bit of life, you have a little bit of bullishness, and that's a whole lot better than sitting back and just trying to catch that falling knife. And so it needs to maybe do a recovery and then come back to hold 10. And that's going to bring that red line down there underneath it. And so that's what I've been kind of looking for on that. But right now, falling knife territory. BAX. I actually had BAX come up on a 30-minute spike earlier this week. Oh, that's what I should have taken yesterday instead of SBUX. So again, I remember this came up on the same list yesterday with SBUX, but this spike right here was not at a level. It was not at a 50% level, and so I kind of nixed it. One of the things that I didn't like about it was the fact that it was. Hold on, let me clean up these lines that I've had from other analysis. So that was a little too close to this level right here. Okay, I like this, by the way. So this 50% level, you see last week going back to, August of 26th, it's been hitting up against that resistance. Yesterday, big bullish bar. You're good to go now. This is bullish. You've broken that 50% level. This looks good. This looks really, really good for bullish, actually. Maybe you can get it pull back to 38.24, and then it can launch from there. But bullish. You've broken the resistance. 2 solid days above it. That's good. I like it. So those are my opinions. Gary Network. I never got the answer on that, but the Intel. So Intel, you know what? We're gonna use that logic of the weekly Tinkinson. Yeah, you're welcome, Bob. Intel. I've been just really Let me tell you, I've told you this before personally. Some of the best things I've done for my wealth is be lazy. And that doesn't make any sense. It doesn't make any sense to me. But doing nothing has saved me uncountable amounts of money. Whether it's someone asking me for a private loan, or it's not buying when everyone says that I must buy it now. Intel is one where I have been sitting back and just kind of waiting. I've been just kind of waiting for it to feel right. And we had this 10% up move on the 30th, it was 10% on a day, which I kind of FOMO'd a little bit. I didn't buy it FOMO. I just kind of sat there and I was kind of like, oh man, I've been looking to buy this for quite a while now. Because I mean, yeah, it's a deal. But yeah, it just pushed even lower. Again, these are just one of those things that comes from years of doing this that I can't really quantify. But as I'm sitting here looking at this and I'm wanting to buy this, I'm thinking to myself, you know what? Everyone thinks this is horrible. People are looking at it, like me included, that want to buy this. I think it needs to go a little lower. I think it needs to, everybody that thinks it's a deal needs to kind of lose some money. And I can't really quantify that, but it just kind of kept me lazy about buying this. And so now we have that second low. Now, again, I'm still interested, but I just don't have the setup I want. And I think probably what I will do is I'm just going to wait for that Tinkinson to move down, that red line. And how that's going to happen, because it's the 9 period, is you've got this day, and then that is 7 bars, 8 bars. And so basically in 2 weeks, let's kind of draw this out. So this is 8 bars, this is 9 bars, this is what it's drawn on now. That's why, again, this is the Tinkinson is the 50% level of 9 bars. And so essentially it's the 50% of this many bars right here. And so 2 weeks from now, 1, 2, it's still going to be the same. It's still going to be 27.93. But one more, and then it's going to move down to here. Let me do this. So that red line is going to move down like this. Well, actually, 1, 2, and then down. Just bear with me on this. This is some old Ichimoku stuff I used to do. And then one more week. And then finally, it's going to really go down, get down by earnings. Look at that. Look at that. Oh. Look at that. Interesting. So by earnings, about that many weeks from now, that red line is going to move down. Price is going to be hanging out. And okay, let's just wait till after earnings. Yeah. Yeah, we'll see. We'll see. So it's going to be a few weeks before that moves down, and then price can potentially get back above it and then possibly go. And so, yeah, I'm just going to be patient. Keep asking me. Keep asking me. I want to own this stock down here. I do. I don't think Intel's going to go away. But again, I'm being patient. Being patient. Instructions unclear. Going to buy more INTC. You're welcome to. But I got my eyes on it. My eyes on it. I'm looking. You're buying Intel when it's delisted from the Dow. Yeah, like I showed with Alcoa. I mean, that was, it's one of those things where that's pretty much the worst thing that can happen. There's nothing worse that can happen after that, and it's sort of like the reason why Bitcoin has stopped going up. You had the ETF, you had the halvening. What's there left for good news to happen? It's one of those things you got to kind of do the second level thinking about when everyone's saying like, oh, you need to buy it for the ETF. That worked. But then after the ETF was the halvening, and so everyone was like, well, you got to buy it for the halvening. But what comes after the halvening for Bitcoin? What good news can people be speculating on after that? There's nothing. Thus, that is what people are buying it up to. It's kind of the whole buy the rumor, sell the news thing. And so if something is about to be delisted, that's what everyone's selling it down to because they think it's going to get delisted. But once that happens, there's no more bad news. It's a good point, Ian. That's a very good point. So that would be something I would look for, is it to actually get delisted. Because like I said, in my years of doing this, I kind of remember things like that Alcoa thing, because Alcoa was just this really, really prominent stock that they took out of the Dow, SP 500, and as soon as they did, right back up, really, really fast. Yeah, I mean this is just a good example. I mean, let me bring that up again. So Alcoa, yeah, it was back in 2020, COVID time, they delisted it. And that's quite a run up from after getting delisted. So yes, there's a lot of validity to that. Same happened to SMCI after the inclusion, when it went down or up. Actually, my friend asked me about SMCI today, and I think I got asked about this by other friends. People keep, if you guys keep asking me, sorry, but if the more you get, okay, I really want people to ask me about this stuff. So that I can look at it. But when more than one person asks me, should I buy this? I'm the contrarian me. It makes it very hard for me to be bullish. I'd rather you come and like whatever stock that you hate, I'd rather look at that and then tell you why you shouldn't hate it. But the soonest thing that I would this is in the value of risk. This stock, for those that haven't heard me before, the value of risk is that dark valley where no matter what you do, it's going to be wrong. If you hold on to it, it's just going to keep going down. If you sell it, it's going to turn around. That's just the way it happens with these things. And when SMCI broke, you notice that it held up till April of this year, 740, and then when it broke it here in July, it's just been in just free fall, and it's basically coming back down to right around the 300 level. Maybe, you don't know, but I would not be interested until it gets down into the sub 300s actually. So yeah, just because you don't know, there's no levels between here and there. The level was 740, and not holding that, now you got to sit here. If you're hodling it, you're back holding in some pain. But would I buy this? Maybe. Because, like I said, with NVIDIA, with any stock, any tech stock, any volatile stock, I want it to be at least 50% off, and you're now down 70% from the high. It's getting good. It's getting good. It's not getting Facebook good. Just to kind of drive the point home, Facebook, when it did its nasty run, it was down 77%. So, yikes, and then turned right back around. Amazon didn't quite have the same drawdown, but from the high there to there is about 57%. And so pretty much any tech stock, if you wait patiently enough, you're going to get a 50% haircut. And it's going to be a really good deal, at least 50%. So, but SMCI is definitely 70%, so it's good there. Yeah. Oh, yeah. Because after something gets included in the S&P 500, that's happened a lot, where things are run up due to the inclusion, and then they drop right afterwards. So anyway, I hope I caught everything. Oh, BTI, last one. British American Tobacco. That's a nice little run up there. My favorite for cancer merchants. I'm being mean. Yeah, you broke the 50%. Let's go to the weekly and make it cleaner. Looking pretty good. Looking pretty bullish. Where are you going to have some resistance from this level? You already broke it. Okay, this is looking good. This is looking good. You broke the resistance pretty solidly. That looks bullish. My favorite stock for cancer is Philip Morris, and it looks like there seems to be a non-secular trend going on right now in tobacco. But I think more to the case, what's going on. If I had to guess, and let me make sure that I'm not too wrong on this, but if we look at basically last few months on our sector rotation, consumer staples, yes, are doing quite well relative to everything else. This, by the way, for those that are uninitiated, haven't seen this before, this is sector rotation. This is a stockcharts.com. And what this does is this compares the different sector ETFs like XLY, XLC, XLK, which is technology, to the S&P as a whole, and you can see what their relative performances are. And then there's a sort of a theoretical model of what this means in terms of where we are in the market cycle, the business cycle, and the stock market cycle. And right now, over the last 100 days, or basically, there's only 5 trading days in a week, so well less. But let's drop it down to 50. So the last 10 weeks, to be a little bit more close to where we are. So the last quarter, more or less, technology has definitely been down. We already know that. And consumer staples, healthcare, utilities, financials, and real estate are up. And if we look on the chart right here, consumer staples, healthcare, utilities, what this basically tells us is that the market has topped and is starting to roll into a bear market. Now, that's not to be scary. That's just what we're seeing here. I'm not saying that we're going into a bear market, but we definitely have kind of topped if you look at the sector rotation model. And so what you're starting to see with not only tobacco, but also Coca-Cola, again, who would have thought sugar water would be doing so well? We picked this up last year, September, off the 50%. Beautiful trade there. So what you're seeing more is consumer staples. Kroger's not really doing that well. Sorry, Jen. But yeah, tobacco, Coca-Cola, probably Pepsi. What are some other consumer staples? Probably Johnson and Johnson. They might be kind of a pharmaceutical. Yeah, doing well in this market that is kind of getting weak because stocks, people, investors are rotating defensively, because if the economy does go down, the theory goes that people are still going to need to buy toilet paper. People are still going to buy cigarettes. People are still going to buy Coca-Cola, even if they're unemployed. And so that is kind of broadly what you're seeing. So thanks for bringing that up about that tobacco company, because you say that, and I just remembered that my stock that I have for consumer staple tobaccos is Philip Morris, which has been doing very well. By the way, I think we looked at it last week, and let me look up real quick. Because when I'm looking at consumer staples, I want to get a return. And yeah, for dividend, the dividend yield 7.76. That's good. And that does remind me of Philip Morris. So regardless of what the stock does, which has been going up, and even at this price, Philip Morris, yeah, they have over 7% dividend yield. That's a very good dividend play. And that's what you want. You want it to give you a return on your money, independent of what the stock is doing. So yeah, I like it. I like it a lot, even at this price. I mean, because the yield is going to be based on the price. So you're getting 7.5% yearly on if you bought it now, and so it's good stuff. Good stuff. All right, Kroger's going to range until the politicians stop blanking with the merger. Kind of like a beach ball being held underwater, huh? All right, guys. Well, thanks for spending the Friday afternoon with me. Hopefully, I've given you guys some stuff to think about. Um, I don't think that Monero is going to moon, but I think you need to be aware of the fact that the crypto is in a bear territory, and keeping dry powder in something boring like a high yield savings account for a bigger dip. Um, don't let anybody tell you that you're doing something wrong, um, because, like we talked about with tech stocks, you're gonna get a 50% haircut at least. So Nvidia 70 is the only time I get interested. Um, but it does begin to look like, and I'm remiss that I need to sit down and make a video about this, that based just upon the sector rotation model, that, I mean, it does look like we're rolling over. There's a lot of uncertainty coming up. We're not going to talk about politics until I absolutely have to, of what's coming up in November. But I think we'll be okay. That's what I always presume. I think things will be fine. And the worst that we're going to get is opportunities to buy things cheaper. So have a good weekend, and we'll see you, next week. Trade wisely.